Hey, hello guys, welcome back to the channel. So in this video I'm gonna try a new format, and we first will start by speaking about global liquidity. So by having a look at the global liquidity from the 5 largest central banks in the world, we can see, and by the way this is normalized by inflation, so this is real liquidity. We can see that we've been in a pretty stable channel all the way from 2007 and probably the data before, all up until COVID 2020, when central banks started printing a lot of money to rescue their economies, small businesses, and etc. And ever since then, we've hit in terms of the real level a pretty nice low that is quite bullish for risk on assets such as S&P and Bitcoin. And as you guys can see, S&P has been going pretty stable without any problems. It early from 2019 to 2020 has got a whiff of AI, so we did have a slight increase of volatility, especially to the upside. But then COVID came along, everything crashed, and what that caused, this global money printing, is a lot of inequality and a lot of money from these highly profitable firms, especially IT firms, to reinvest their money back into the stock market, back into the equities. Now, although this is a pretty bullish graph right here, if we have a look at this in terms of its nominal value, so not adjusted for inflation, we can see that we haven't actually reached this norm of money supply level. And this is slightly concerning. I do believe that this graph in the short term will be more accurate to use and will have a lot higher implications for the risk on assets that we're analyzing. But again, this has to, in the long term, normalize, which could happen in a couple of years, could happen more close to now. So that's it for the global liquidity. One thing that I wanted to show you, this is basically GDP. We have GDP results releasing every 3 months, quarterly, but these indexes, which I combine together, use financial data and macroeconomic data that comes every week, and it basically shows you the business cycle as it is in the short term. It shows you the predictions of GDP before it is released. And the data that it uses is non-farm payrolls, unemployment, inflation, PMI. And right now, at these red levels, we are pretty hot. It means that the economy is likely overheating. So I believe that before we have a massive rally, we must see some sort of a downside. I don't necessarily agree with the dates that I'm showing right now, June, May, and April. I think that because of how volatile this graph is, we can see something like this that happened in December 2014. The graph going quite strongly down, after which we can start our long positions. And given how bullish the money supply is, at least in the real terms, I think that macroeconomically we're pretty strong for the positions. Now if we move forward to something exclusive to this video, I have prepared for you guys a rough day that I believe BTC will bottom at. Now, why do I think 8th of March? It's all related to the fact that the ETF for BTC was released on the 10th of January 2024. And if I show you guys what happened with other assets, we have gold in 2003, first ETF releasing on the 28th of March, and a year after this, after a small bull cycle that we've seen in Bitcoin right now, it had bottomed to levels that have never been seen before, after. So roughly this was 409 days after which it resulted in a 2667 bull cycle, not bull cycle but bull run. And after this the market was chopping up for a little bit, but this is the main narrative of what I'm trying to show you guys. This is what happened to gold. These days will be very important. And for S&P, a very similar thing occurred. In fact, frightening how similar it is, because S&P's first ETF was launched in 1993, 22nd of January, and also like gold, it's literally 30 days away from being exactly like gold. The S&P had a mini bull cycle, after which it bottomed quite hard, and this bottom was roughly a year after, 437 days as I said. And what happened after, exactly like gold, is a 2184 long bull run to the upside. So these levels have not been seen ever since 1994, 4th of April. Now, going to Bitcoin. Bitcoin is highly correlated to S&P, highly correlated to gold, not as much as in the past, but still highly correlated. And on average, based on these two assets that is highly correlated to, who also had their ETF first launch in the past, I've estimated that in 423 days after the first ETF for BTC was released, we will see the beginning of the bull cycle, a very strong bull cycle, which probably will mark levels that BTC will never hit in the future. Now, a lot of traders, a lot of investors, YouTubers say this thing, and I just have to tell you guys, there is a lot of risk with hearing information like this. You cannot get excited and start putting your life savings into Bitcoin. That's not how it works. This is simply a prediction, my prediction, based on historical events that have occurred. So take this with a grain of salt. Now, one reason why I believe that this is quite likely is because of the alignment of so many factors, like the fact that this is part of a 1, 2, 3, 4, 5 movement, which is an Elliott wave theory cycle. And here, once ABC corrects, we're going to see another one of these 1, 2, 3, 4, 5 waves. And specifically, I've shown you guys before the long-term trends of Bitcoin, but as I analyze it, we have this very interesting looking consolidation from 2017 to 2020 being the ABC, and now for us, for this point where we are basically in the third wave, and the third wave is the strongest and the largest wave in comparison to number 1 and number 5. Again, these long-term waves that I just drew, they're quite inaccurate in terms of the future projections, but they're just for your information. And for those that didn't understand me previously, what I meant is this is why this is a new cycle, because all of this in the past was a 1, 2, 3, 4, 5, and now ABC, to then proceed to our current time. We're basically halfway through wave 3. So as long as this information is correct, this would take us to a 2,426 days long bull run. Between just how many years would that be? That would be roughly 2030, 2031. We would see a very long rally to the upside. Remember what I said about taking this information with a pinch of salt, because this is highly speculative. Now going on to my spread charts. As you guys know, spread charts play a key role in my analysis, and I've normalized BTC by a couple of American financial instruments and gold. As I told you, this is an ABC correction that we are in right now, and this ABC correction normally would end up within this channel. Why? Because by theory, Elliott wave theory, wave C has to be between 100% of wave A, which is this line right here, or 162% of wave A, which would be this line right here. Now, we are consolidating quite hard at this level, and it's understandable because theory still holds true. But I don't think that we're quite ready to go to the upside yet. I could be wrong. We might see a small upside from here, and then we'll go down to roughly these levels. But I'm not too convinced that we will be starting our wave 1 after this. I am not convinced. So with these spread charts, why I like them is they are very good for technical analysis. They have good resistances and supports that abide well to significant resistances and supports. Let me show you this level right here. I've shown you this parallel channel in the past. We marked it from the top of 2017 going to 2021, where it has shown some very significant movements, either moving down from it, retesting it to the downside, retesting it to the upside, retesting it in a much bigger movement to the upside here as well, and then finally the 2022's massive crash that we have seen, also retested beautifully out of this line. So this was the wave 1, 2 and 3, and at this point, at this wave 3, we tried to move above and retest this line right here, but we were highly unsuccessful. And right now, it has, not right now, but at that moment, it had retested this resistance then to go to the downside and has not touched it ever since. This was quite a complex corrective structure for a wave 4, and that's why a lot of people gave up on being bullish, and but the bull run did come at the end. So I expect us to hit these levels, after which we should revert and see the wave 1 finally being here. Now I have another parallel channel to show you guys, and that is from this movement right here. So 2021 highs as well. We've had 1 touch, 2 touch, 3 touch, and then the 4th final touch in the 2024 in the wave 3 when we try to break it. So this level is even more significant in my opinion than this than these levels outlined here, and they together come to make this very interesting rectangle, and some of the levels that could have been we've passed already. So right now we're looking at these levels right here, particularly the intersections between the strongest, the biggest lines. To narrow down this area even more, I have this rectangle right here. Okay, this rectangle right here, which also arises from 2021's cycle and has been a pretty strong kind of like a 3/4 wave of the whole wave, of the whole 2021's topping cycle, and it has been also a key resistance for our wave 3, which was unsuccessful into moving higher. And again, we've crossed it here, similar to this diagonal level that I've shown you guys before, and went to the downside to this complex correction. So now we have quite interesting narrowed down area that I believe we should be bouncing off of to go to the upside. Let me just move this up a little bit. So I told you guys, based on the ETF inflows from the highly correlated assets. So as I've shown you guys my rough date prediction from the ETF playouts of assets that are highly correlated to Bitcoin, we have this 8th of March rough date. I would genuinely think probably before rather than later, but this is the rough estimation, and it would take us to the middle of the white horizontal parallel channel to intersect also with the middle of the channel that I've shown you guys before. And one more thing that I wanted to show you guys, let me just clear this up so we can actually see what's happening, is the Fibonacci's. Fibonacci's, they are quite a good tool to use, and we have the black lines here that some of you might be able to spot, but I'm not considering them. I'm only considering the golden ratios. So on the logarithmic chart, it's been quite obedient technically, but we have actually crossed this Fibonacci, and it might scare some investors off, but I believe as I've shown you guys before, due to all this data, we're still quite bullish. But if we have a look at this Fibonacci on a non-logarithmic scale, what we can see is a very beautiful first marker of the wave 3 top, and also a good level for us to go down to. Now, as you guys see, Fibonacci's are very good in long-term and non-risky trades, because they are likely to be crossed below. But so one other tool that I wanted to show you is the Fibonacci's in particular. Right now I went from a logarithmic chart to non-logarithmic, because I believe the Fibonacci's are slightly more accurate on these type of graphs. And as we can see in our wave 1, 2, we haven't really touched them, and that's purely because the Fibonacci's were drawn from the 1 to 2 movements. Now what I expect to happen is for these Fibonacci's to be crossed a little bit, as it's been done in the past, slightly too much in wave 4. As I told you guys, it was a very complex correction, but more like it was halfway through wave 3, so like right here and right here. And if we have a more accurate look at this, sometimes we don't even retest, but the times when we do go above it, like right here, we normally move 2.6% below. Now if I look at this line right here, what happened to another part of wave 3 was that we had crossed a lot less, 0.33% of this Fibonacci. So I don't expect us to beautifully bounce off these levels here. I expect there to be some sort of a downside, but what I can tell you guys is this level aligns very beautifully with our marked levels on the logarithmic chart. So okay, so this channel will not be coming to these levels because it just looks completely different on a non-logarithmic chart, so I'm going to ignore this one right here. But the other parallel channel comes and also aligns well with everything. So on a non-logarithmic scale, I would expect us to roughly bounce between these levels right here. Given that I told you guys it's a bit more likely that we will bottom before 8th of March, but I just don't expect us to be quite bottoming out yet within the next 5-6 days, although it is a high possibility, very high possibility. I believe that this level of roughly would be a good estimate when we can open our positions. And even if we go lower to, let's say, this white area right here, I will be adding my positions more and more and more and more due to us still being within a pretty good bullish range. However, if we started breaking down below this line in particular, this green line that I have shown you guys here, or let's say, let me just show it on a logarithmic chart. If we started breaking down below these levels, so let's say like in late March, not late March, but halfway through March, if we're still hovering around these levels and potentially even like touching these, then that would be a very scary situation for Bitcoin, and likely it would mean that this bull cycle is either postponed or fully cancelled. So that is it for my analysis. I hope you guys have enjoyed it. Before I go, I'm just gonna show you quickly what levels I estimate this to be for Bitcoin. So right now we're sitting at this level right here. Let me just mark it from the yesterday's low. So this would mean that I expect us to move to 2.78% down. So now this 2.87% down from yesterday's low would roughly translate to 92k. So at 92k we might see some very bullish action. Again, I still think that we're likely going to be continuing this very slow capitulating movements for Bitcoin, not really going up or down until those dates that I provided you guys with. And what's even more likely is that we will be going upwards before the 8th of March. So once this level is hit, even if it's before 8th of March, we will be entering the long positions. And yeah, that is it for me. Thank you guys for watching. I hope you enjoyed the video, and leave a comment on what you guys think will happen and what you guys think about the video. Thank you.